What's going on, everybody? It's Jeff here. Welcome back to the channel. I finally had some time to sit down and dig through the court filings against Robinhood and Citadel. And let me tell you, the evidence and information inside here was absolutely mind-blowing. We finally have some concrete evidence of the abuse and manipulation against retail traders. The actions that were being taken and the actions that were known about that were going to be taken unbeknownst to us as retail traders, as we put our hard-earned money into the markets and having faith behind these institutions, were absolutely slapped in the face. So in this video, I want to go over a few key points. Then I also want to talk about how it is going to relate to the market going forward. So let's get right into it. First off, this is the filing. I will leave a link down below that has all 83 pages. You can go and look up yourself. And it really just goes through everything from the beginning. I'm not going to cover everything with you. Talks about Robinhood, talks about the introduction, talks about the dates, really gets into detail about the fact of that they canceled the buy button. There was only the sell button, and they over leveraged themselves. Now, this was announced to them, and this was completely on their doing. This was not a Citadel thing from everything I read in here. And the reason why they did this is because of their margin requirements. They let all these individuals sign up to their app. They gave them access to be able to start trading before funds actually settled. And they put themselves in a position that was completely over leveraged. They knew this was happening, and they continued to let it happen in order to try to profit and get as many customers as they could. Here is some of the issues that I want to pull out of this that really spoke to me. And this one right here, we are too big for them to actually shut us down. This is referring to the NSCC. They literally called out the NSCC saying that we were too big for them to shut us down, that they're going to be able to navigate this issue of the margin requirements on their own. And that is because they had way too many people on their app, way too much activity happening from there. If they shut down Robinhood, they paused trading on Robinhood, it would absolutely send shockwaves through the market. And the issue with that is that the executives at Robinhood knew that. So it gave them the upper hand to be able to make the plays on their own. When it comes to this quote right here, it says, I sold my AMC today. And this is coming from the COO. I sold my AMC today as of January 26th. FYI, tomorrow morning, we are moving GME to 100%. They're referring to their margin requirement, meaning you would not be able to buy it on margin. They knew these actions were happening. This is what's referred to as insider trading. This is what Martha Stewart, another form of what Martha Stewart went to prison for, because they knew an action was going to be taken. They were going to halt trading in order to be able to subsidize the price, in order to be able to meet their margin requirements. And you can go through this, and it talks to in much more detail. You can skip around a little bit. They had 3 billion margin requirements actually at one point, and it fluctuated heavily throughout the next few days. It goes through here even further, talking about Robinhood app itself. It gives you all of the plaintiffs that are actually in this case and what their experiences were holding 761 shares of AMC stock, and explains how they were forced to sell at a price that was artificial, that they should not be able. The price should have been much higher, and they actually had to take a loss on this since they got out of it, or it should be higher as of today. So a whole bunch of different scenarios. But as I got through this a little bit further, my question was, how does Citadel relate to this? And it's because of the information that was passed to them. Now, we have known for a long period of time that Robinhood, they make their money from the payment for order flow. They don't pay for trades anymore. Back when I got started on Scott Trade and then I moved over to Thinkorswim, you used to have to pay $6.95 a trade, $6.95 to get in and $6.95 to get out. And that's how these platforms are able to make their money. The payment for order flow model went from that you are sending your trades to a market maker, which then dictates the price and be able to send you a commission back to it. That's how Robinhood makes their money. And because Citadel gets so much of their business, it was made aware to them of what exactly was happening. So while Citadel didn't shut down the buy button, they didn't say, wait a minute, we're going to get margin called. They didn't say that, their exposure was too great because of their heavy short positions. The information was passed to them and they were made aware of it because of them being a market maker. However, on the hedge fund side of it, which is a different subsidy, and actually is all under the same entity, so it shouldn't really be fair that they have these different subsidies, which is what they do. They knew that they were able to either, one, exit their short positions, which out of all the information and research that we have done, they did not exit their short positions. They actually doubled down on it because they knew that a natural supply and demand, when you didn't have people being able to buy these shares and only sell, it's going to drive the price down. Now, let me tell you what happened. What would happen if on the 26th you knew that you wouldn't be able to buy any more AMC, that nobody else would be able to buy AMC, because by now, in order for a stock price to move higher, there has to be buying pressure. If that information was present to you, you would have been able to make decisions much earlier. And that's exactly what happened to them and why the price was driven down so much heavier than what it should have. Now, in this situation that we are in right now, and I've said this for a long period of time, there's a lot of awareness and a lot of attention that is exactly what is happening to this issue. It hasn't gone away. This happened in January. We're already into October, and AMC is hanging in there. There's still buying pressure. There's new class actions coming along, and it's bringing light to the SEC having to make a decision on what is going on behind these large institutions. What is happening between hedge funds and market makers, and that manipulation and the correlation between the two, and how they're literally able to pass off information that will slowly change going forward. Whether it directly affects immediately the price of AMC, which is hanging out at a very, very nice level right now, it will forever change the way retail trading is done in the future. Retail traders have entered ever since coronavirus. The numbers are higher, and they have subsided just a little bit as naturally people are home. They couldn't go out that much. They had some extra money. Maybe some of them had to go to work, and they're not able to trade in front of their computer. However, the number of retail traders that are active right now inside the markets are much higher than they were pre-pandemic, and those are going to stay. Retail is around to stay. So these changes really need to be made. It's going to take a little bit of time, and like I said, that collusion will slowly unravel, and it is continuing to unravel. And at every single tweet that Citadel says that is pushing, no, it wasn't us, it just gives you more affirmation and confirmation of why you're in this play. So while me personally might not cover every tiny little thing that happens with AMC anymore, okay, I cover the price action of it. I talk about some other stocks that we get to play while we're still holding our main position, is because of that. Let the time play out. Let the course make its role. Follow the price action, see where it goes, have a little bit of indication on what's next to happen. We could take a look at what exactly happened today. It's beautiful, sitting at that $39 level. Jump over to the daily chart. Like I said, we saw a little bit of resistance bouncing off the 50 moving average. Give you some indication of where the price is going to go. Nobody holds a crystal ball. Okay, so anybody's sitting at the screen looking at it, and if the price is on an uptrend at 38.72, and it's say, oh, it's going to go to 38.75, that's not really any type of prediction of where exactly the price is going to go. We can only base it off of the information that we have, the conviction that we have, the fact that we've already moved 500% from when we started covering this, on our channel and all over YouTube and on Twitter and on Reddit. And then you get to look at the MACD, which is trying to make a little swift move, which last time we did that from the 30s going up to the 52. But like I said, that's enough for the price action. I'm going to really want to see exactly how these lawsuits play out, because it is little man going after big man, a little bit of David and Goliath. But like I said, some of this evidence is just blatantly wrong. So I wanted to give you my take on this video and why the confirmation that you might have, that extra confirmation is still here because of the hard proof that we have. It was all speculation. As much as we knew it, as much as you knew it, as much as I knew it, having it written on paper from lawyers gives you a complete confirmation. So that's it for this video, guys. Enjoy your weekend. I'll see you in the next one.